Welcome back, our accounting boffins out there. Yes. What are we looking at now? Now we're looking at income tax and your SARS income tax accounts. Now remember this, very, very important. In terms of the law, companies, in terms of the Companies Act, companies are obliged to make 2 provisional payments of taxation during the year, right? So payment number 1 will take place, payment number 2 will take place. After 6 months, first payment. After another 6 months, the second payment takes place, right? Now, what happens after that? Now you come to the end of the year. Now your company receives a tax assessment from SARS, and then you make an entry whereby you record the income tax for the year. Now understand what I'm telling you. I'm telling you that during the year, something's going to happen. Let's look at it in terms of an accounting perspective. Here goes. After 6 months of trading, the accountant calculates the profits and works out that we need to make a certain payment to SARS. This is what we call our provisional tax payment. That's the one. Okay, what's my entry? Start from the known first. In other words, you are making a payment. Definitely your bank account is involved. What's happening to your bank account? It's decreasing in value, therefore credited, and you will now debit an account called SARS income tax. Notice the source of your entry is your cash payments journal, your contra account is bank, right? And obviously the amount. Understand that your SARS income tax is a balance sheet account. Okay, so recap the entry. After 6 months of trading, made a payment to SARS, double entry, debit SARS income tax, credit bank. Got that? Brilliant. Let's move on. After another 6 months of trading, we make the second provisional tax payment to SARS. Now what happens? Again, because we are making a provisional payment, a check needs to be issued. When a check is issued, immediately you know your bank account will be credited and you would now debit your SARS income tax. Remember, the second provisional payment, that's that one there. Once again, your 2 accounts involved are bank and SARS income tax. Okay, now you come to the end of your financial year. But before we get there, let's look at this one year. Do you see this balance at the beginning of the year? That is your balance from the previous year. Understand that that balance, your opening balance, could either be a credit balance indicating that you were owing money to SARS and as such you have a credit balance, or if it indicates a debit balance, what does it mean? It means that SARS owes you money. You've overpaid an amount to them. As a result, it's now a debit balance. The question now arises, what type of an account is SARS income tax? And the answer, believe it or not, is it depends. It depends on what? It depends on the balance in your SARS account. If it has a debit balance, then certainly it is a debtor account and would appear under my trade and other receivables. But if it has a credit balance, it would definitely be a liability, therefore appearing under trade and other payables. Okay, so now you have a clear idea of the entries made during the year. Now we come to the end of the year. And now we receive our tax assessment from SARS. For the first time now, we use the income tax account, which is a nominal account. That's right, it's an expense to the company. Therefore, you debit the income tax account. There's my entry. Watch, a debit to income tax, and a credit watch where my credit goes to. My credit goes to my SARS income tax account. Why? Because that's the amount that's due to SARS in terms of the tax assessment. Now, clearly, guys, look at your SARS income tax account. It needs to be balanced because it's a balance sheet account. And if it ends off with a credit balance, it means you are owing SARS money. If it has a debit balance, perchance, if that happens, then obviously your SARS income tax would be an asset account because that amount is what SARS owes us. So understand that this account can either have a debit or a credit balance at the end. Clear? Right. Now, what happens to income tax? Income tax, being a nominal account, being an expense to the company, needs to be closed off. And where are we going to close it off to? We're going to close it off to our appropriation account, that final account. You will see just now how we deal with that particular account. Okay, guys, let's recap. First provisional payment, debit SARS, credit bank. Second provisional payment, debit SARS, credit bank. So those are your provisional payments. Come year end, now you make your adjustment. What's my adjustment? A debit to income tax and a credit to SARS income tax. Keep those entries in perspective, and it will make your task much easier. But that's not the end. There's more to follow. So if you want to know more, take a break and be back with us on Matrix Uploaded.